Income splitting in Canada. Income splitting can be one of the most powerful tax saving strategies for Canadian families, but if you're not careful, it can also backfire. Attribution rules are designed to prevent families from shifting income to lower taxed individuals without meeting certain conditions. And if you don't understand how these rules work, you could end up with a bigger tax bill than expected. Today, we're going to break down how income attribution works in Canada, what are the traps, and give you an idea how to split income the right way. Welcome to the channel. My name is Eric Silvaggi. I'm a wealth advisor with Aegis Wealth Management, a part of Wellington-Altus Private Wealth. The goal of our channel is to educate Canadians on the complexities of personal finance and to provide clarity to help them reach their goals. If you're new to the channel, make sure to subscribe and click the like button. Let's dive into income splitting and how to avoid attribution rule traps. Spousal RRSPs and RIFs, attribution rules and exceptions. A spousal RRSP allows the higher income spouse to contribute and receive the tax deduction while the other spouse owns the account and is taxed on withdrawals. This is a great tool for retirement income splitting, but attribution rules apply if withdrawals are made too soon. Here's the rule. If the contributing spouse contributed in the year of withdrawal or the 2 previous years, the withdrawal is taxed back to them. But there are exceptions. There's no attribution on RIF minimum withdrawals, no attribution if the spouses are separated, non-residents, or if the contributor has passed away. There's no attribution on withdrawals under the home buyer's plan or lifelong learning plan. For example, Tony contributes $15,000 annually to Carmela's spousal RSP. In 2024, she withdraws $50,000. Since Tony contributed in 2022, 2023, and 2024, $45,000 is taxed to Tony. Only $5,000 is taxed to Carmela. When the RSP is converted to a RIF, only withdrawals above the minimum are subject to attribution. Again, only if contributions were made in the year of withdrawal or 2 previous calendar years. Attribution to a minor child, what you need to know. When you give or loan money to a minor child, niece or nephew, any interest or dividend income is attributed back to you. But here's the key. Capital gains are not subject to attribution. That's why many parents and grandparents use in-trust accounts or formal trusts to invest in capital gain generating assets like equity mutual funds or ETFs. You can also use corporate class mutual funds or ETFs within a trust structure to defer or convert income into capital gains, which are taxed at the child's hands, which is at a lower rate. RESPs are another great tool. Contributions grow tax deferred, and withdrawals are taxed in the student's hands, often at a 0 tax rate. Once your child turns 18, attribution rules no longer apply. You can gift them cash to contribute to their TFSAs or RSPs, helping them build wealth in a tax-efficient way. Attribution on loans to family members. Attribution also applies when you loan money to a spouse, unless you charge interest at the CRA's prescribed rate and the interest is paid annually by January 30th. If the loan is interest-free or below the prescribed rate, and the purpose is to generate investment income, all that income is attributed back to you. But if the loan is used for non-investment purposes, like a down payment on a principal residence, there's no attribution because no income is generated. Understanding the TOSI rules, tax on split income. TOSI rules were introduced in 2018 to prevent business owners from splitting income with family members through private corporations unless those family members are actively involved in the business. Here's how it works. If a family member receives dividends from a private company and doesn't meet certain criteria, that income is taxed at the highest marginal tax rate, regardless of their actual tax bracket. This applies to spouses, children, and other related individuals. There are exceptions, but they're complex and it's worth discussing in depth with your accountant. Bottom line, if you're paying dividends to family members, get professional tax advice first. The TOSI rules are strict and the penalties for getting it wrong are steep. Legitimate income splitting strategies that work. Despite the attribution on TOSI rules, there are still many legitimate ways to split income in Canada. Pension income splitting. Spouses can split up to 50% of their eligible pension income on their tax returns. CPP sharing. Spouses receiving CPP can reduce the share of their benefits to reduce the overall tax. Spousal RSPs. Contributions are deductible by the higher income spouse, and withdrawals in retirement are taxed to the lower income spouse. Loans at a prescribed rate. Loan money to a spouse or adult child at the CRA's prescribed rate and have them invest. As long as interest is paid annually, income is taxed in their hands. Capital accumulation. Have the higher income spouse pay all the household expenses, allowing the lower income spouse to invest and earn income at their lower tax rate. Reinvested income. Income earned on attributed income, i.e. income on income, is not subject to attribution. Reasonable salaries. Pay a reasonable salary to a spouse or a child who works in your business. The salary must reflect actual work performed. Gifts to adult children. Once your child turns 18, you can gift them cash to invest without triggering attribution. In trust accounts. Set up properly, these accounts can generate capital gains taxed in the child's hands. Income splitting can be a powerful tool, but only if you understand the rules. Attribution and tax on split income are designed to prevent abuse, but with the right strategy, there are still many ways to help reduce your family's overall tax burden. The key is to plan ahead and work with a qualified tax professional and wealth advisor who can help you navigate the rules and build a strategy that works for your family. If you found this video helpful, give it a like and subscribe. Drop a comment if you have any questions about income splitting or attribution rules. Thanks for watching, and we'll see you in the next video.